Hey everybody, we've got Tatiana here with us on the Mortgage Minute. Hey Tatiana.
Hi guys, how are you?
Good.
Good,
How are you?
Good. I like to see the green grass again.
Me too. It's so pretty out today. After this, I want to go sit out on the front porch.
It's
All
beautiful.
right, so before we get into one of the, I'm so excited for what we're going to talk about today, but let's first talk about interest rates.
Yep.
What's happening?
Yeah. So let me share my screen as always. So the interest rate, really nothing happened major. They remained steady, and 30-year fixed is at 6.9% right now. Given the stabilization in the rates, potential home buyers are starting to jump off the fence and go back on the market. We see the competition. We see, well, you can talk about it, but I see that clients are starting to struggle getting under contract and price escalations, right?
Yeah.
You see
Yeah.
that as well?
And properties going under contract and coming soon before they even hit the market. And yeah, we're starting to see a lot of that competition happening again. And we're not even in the spring, so it's only going to get worse.
Are you doing a lot of the seeing a lot of appraisal gaps?
Not yet. I
Okay.
haven't seen low appraisals. Oh, you mean yeah, no, I
Yeah,
haven't
in
seen
the
that
offer. I think that's probably going to be coming your way very, very soon.
yet. Yeah.
Okay.
So the buyers basically, they motivated now, and they start the bidding wars that artificially escalating the prices. They're increasing the prices themselves because
Yeah.
how else can you win? Most sellers look at who gives the better price.
Yeah.
And that's how the prices go up.
Yep.
Yeah, but they expect the rates to remain steady or go down this year. So the market is going to be hot, I think.
Yeah.
I was wondering didn't we just have a jobs report that came out again?
The jobs report did come out, and it's actually, I have to check on that
I think it was
because
still
I
looking
didn't have a
pretty
time.
good, yeah.
But the rates were actually doing really good yesterday, and I have to double check on the results for what's going on today. Haven't had a chance to do that yet.
Okay.
Okay.
All right. So basically, the interest rates kind of stayed steady over the last 7 days. There wasn't any dramatic changes or anything like that.
Yeah.
No dramatic changes, which tells us that if job report came in, probably came in at what was expected.
Yeah.
Okay.
Yeah, I think so. I was wondering because we've heard about some bigger companies that are still talking about layoffs. Like we've had a whole lot of layoffs with these big corporations in January. So I'm like, oh man, is that going to be good or bad for interest rates? But you'll tell us if it happens.
That's right.
Yep.
All right. So you got a question?
Yes. Okay. So I love this topic. Love, love, love it. It's the burning question of what, besides interest rates, make a good lender? Like, what are the factors that really need to be taken into consideration to choose your lender? Because a lot of people get stuck in just that interest rate. And it's so much more. We, as the real estate agents, we know how much more it is, both when we're submitting offers and when we are receiving offers for our sellers. We know what it takes, and I want to hear from you about it too.
Yeah, that's my favorite topic too, and thank you for bringing it up.
That's because you check all the boxes. That's why you love it.
Thank you so much. Yeah, so let's talk about that real fast. So choosing your lender, besides the interest rates, we need to look at if the lender is local, right? If the lender understands the local market and local real estate rules, so to say. If the lender is located in California and you're buying in Virginia, first of all, it's different time zone. It's 3 hours difference, right? you want to talk to someone at 9 o'clock in the morning, it's 7 o'clock, they're most likely, they're not even gonna pick up, or what, 6 o'clock, right? So also it's very important to understand some even mentality of local area. Simple example, the contract, some states contracts are different definitely than Virginia contract, right? Even within Virginia, the contract would be different, and closing date in some states is a suggested date, and that's how lenders that are not local, they think, okay, so we're closing on February 1st, but it's suggested date, we're not gonna really bend backwards to meet that closing date,
Yeah.
because it's
Yeah.
just a suggested date. So there's a lot of different nuances that are involved in certain buying in certain area, including, you know, even simple things as disclosing maybe taxes, property taxes, or insurance. They don't really know how much typically insurance is. Of course, you know, when I run estimate, I estimate, it's an estimate, but you know, I'm in the ballpark. I'm not going
Right.
to you know, quote $3,000 a year premium on insurance on the condominium, right? When some states, like in Florida, it's probably gonna be like that. And
Yeah.
if you're by the ocean, for example. So
Yeah.
it's very important to have a lender who is local and who works a lot in the area and understands that.
Yeah.
Yeah.
Yeah. Go
But
ahead.
before we move to the next one of the points I want to make for buyers is sometimes they ask, well, what's the big deal? Suggested date, closing date, or, you know, hard and fast closing date. What does it really matter if we're just like, oh, okay, we miss it? And what they don't understand, and we've seen this happen, is that's your EMD, right? That's your earnest money deposit that is gone out the window. They don't often understand that this buyer could have had this offer, the seller accepted their offer, it's now under contract, you're now working and hoping that your lender stays on top of everything, and if that ball is dropped, you don't know that that seller didn't get another offer that came in that's a backup offer that was better than yours, and they're all too happy for you to make one little misstep
That's a
for
really
them
good
to
point.
void your contract, take your deposit, and go under contract with this other buyer. So
Yep.
money, money, money.
Yeah, and it matters even not just statewide, like, you know, Northern Virginia is a unique market versus, you know, Richmond or something.
Yeah.
Contracts are different, the terms are different, the energy of the market and the way things move. So yeah, it's very important to have a local renter or
Lender.
a renter,
Got it right.
local lender like in your market
Yeah.
that knows the market. So that's critical.
Very good. Yes. Okay. Next.
All right, so let's see, availability, you know, fast response, available after hours. I know plenty of lenders that are from 9 to 5. Even their voicemail says, you know, I'm available from 9 to 5. If you call me after 5, I'll return the call after the next business day.
Yep.
Not available on weekends. What if you write in contract at night? And typically that's what people do. They write contracts after hours.
Yep.
You need to run numbers. You need to run scenarios. Lender needs to be, you know, team up with the realtor and maybe strategize how to win that contract. The appraisal gap. So maybe we need to talk about, can we waive contingencies? Can we have the gap, that appraisal gap? What can we do to make it work? You need the letter. I write letters at 11 o'clock at night sometimes, and that's important. And also, you know, the fast response, the last thing you want is to ask a simple question and get an answer 24, 48 hours later with following up question, and then you ask another question, and then 40 hours later. So we can talk like this for a year and not get anywhere, right?
Yeah.
So
Yeah.
it's super important to have someone who responds fast and works around the clock. Yeah.
Right. Because a lot of the negotiating goes on between the buyer and seller agent it's like there's an offer in hand, but then a lot of this negotiating happens on the phone and text before the other person makes that other official counter offer for them to all sign off on. And that's when it's so important that we and our buyers are on the phone with you all the time. And it's late at night, right? I mean, we're tag teaming. Hey, can we work this? Can we do, like you said, the appraisal gap? Because of all that negotiating is happening right now. And if we're ghosting a seller's agent, with our client's offer because we can't get an answer from a lender, then they're not going to wait. They're going to take the other offer.
Yeah. And another point on that that's really important is when you're negotiating, a good seller's agent has to talk to the lender to get confirmation that this buyer is qualified, that all the criteria was met. And if it's a Saturday and they've got multiple offers and they can't get in touch with your lender because they don't work on weekends,
Right.
then they're going to lose that offer. And
Right.
and that happens quite often when people go with the banks where they only work during, the normal business hours. So this is the key one. To me, this is the most important one. It's even more important than interest rates in a market where it's highly competitive, because the ability of the agent to talk to that lender gives that agent comfort in knowing that the buyer can
That's true.
qualify. So that's a really, really important factor.
Yep.
Yeah, and one thing that I sort of kind of piggybacking on the first bullet point about local lender, that when you work with someone who is local, they have relationship with the realtors. Maybe they don't know that realtor, but they want to know the realtor, right? So if it's outside lender, maybe just even a call-in center, that you might not be able to talk to the same person every time. They don't really care. They get business from phone calls, like big banks, customers, they need to get a mortgage. So you just call, okay, I bank with XYZ. I'm not gonna call names of the banks, but you banking with this bank and you want to get a mortgage through them. They're gonna send you to some consultant that relies just on calls like that. They don't care about building relationship with agents. And if they don't care about that, and they don't care about referrals from agents, the customer service is not going to be there. They don't really care. They're not going to be strategizing. They're not going to be replying fast, because they're just going to take their time and go play golf instead of working and trying to get the deal done.
Exactly. It's a relationship business, not only with us and our respective clients, but with each other, and our whole network of realtors and lenders. And we all have to play nice together. And that's so important.
Yep.
Offer more than one loan option. I think, that's very important, because it's, it shows that person is creative, and they give you options, and maybe you're not gonna they're gonna give you 4 options, you're not gonna like 3 of them, but at least, you made that educated decision that actually, this loan is the best for me. Because you might hear that somebody tells you FHA is wonderful, but your lender gave you only one option of conventional, right? Or they just gave you FHA because you said that you heard it's wonderful, but maybe it doesn't work for you as well as some other type of loan. Or they give you one rate option when you can actually maybe buy the interest rate down and get lower rate, and it will make more sense for you. So a couple of different options, always good to have, and that's important factor as well.
Yep, that flexibility. Yeah, absolutely.
Very important. We've actually had to call on behalf of a buyer, one of their lenders, and it was in a negotiating situation, and it wasn't you. And I can remember you asked them, hey, so what other options do they have going forward? Can they do, I think it was conventional or FHA, and it was all kinds of stuff. And they said, oh, we didn't talk about that. And he said, well, did they not qualify? He goes, oh, they wouldn't want it. We didn't even look at it. They wouldn't want it. And it's like, how do you know they wouldn't want it, right? They didn't even present it. So that's huge. Yeah.
Yep.
And a clear explanation. want to have someone who knows how to explain in simple language, right? Not to give those fancy abbreviations, LTV, DTI, whatever that could be, and just explain it in a simple way that you understand, because it's something that you don't do every day, buying houses, getting a mortgage, and something that is everyday thing for a lender. Well, of course, this is how it works. What don't you understand, right?
Yeah.
Yeah.
You know, you might not understand because you don't, you don't involved in something like this every day. So just clear, simple explanation, ability to explain in that
Yeah.
you understand. That's important as well.
Yeah.
Yep,
I agree.
absolutely.
Flexibility.
This is huge.
Someone who can do quick settlements. We're flexible. We're not gonna do 30, 45 days and there's no ways around it. We need to win this contract. How can we do it? Can we close in 2 weeks? Can we close in 10 days? What can we do to do that? Someone who doesn't put much money down, having hard time getting under contract because of that, let's get them fully approved while they're looking for a property. And at the same time, we can lock the interest rate in, because typically you can lock the rate only when you are under contract.
Yeah,
But if rates are, right now, rates are stable and they might go down, it's different story. But if you see that rates are going up, even in the short term, and you're looking to buy right now, and you're looking for a house within this 30 days, and you see that rates are going up, we can get locked in while you're looking for a house. So
Yeah.
the flexibility
Yeah.
like that, or the bank has less overlays. An overlay is more stringent guidelines on top of the actual agency guideline, like Freddie Mac or Fannie Mae or FHA, that they all have their guidelines, but bank can add additional layer of stringent guidelines. So if lender
Extra
has
hurdles for them to
minimum,
have to jump over.
I'm sorry,
It's like extra hurdles for them to have to jump over.
exactly.
Okay.
Exactly. And if lender has minimum of overlays, or maybe they don't have any, or they have a process of getting exceptions done, that's important as well.
Okay.
yep,
Let's see. Oh, and that actually goes also to knowledge of the guidelines, in its echoing back to offer more than one option,
Yeah.
or being more flexible. Just sometimes we need to think outside the box and offer solutions. Not every loan is simple cookie cutter loan, and you might know someone who had a loan done and it was like very easy, but everybody's situation is different. Maybe
Yeah.
someone works just on a base salary, puts 20% down, super simple, but some people might be self-employed or don't have assets, or have assets in not allowed form of assets. So you just need to sometimes think outside the box and offer different solutions
I
for
think
that.
that
So
comes
I
to,
think this is very important as well.
yeah, and I think that comes down to, number one, the company that the lender works for, because you work for a great company that has a lot of flexibility and different options. And then number two, the lender's understanding through experience of how to navigate all those options, because you've got this like innate understanding of, if you can't get a loan, then they're not going to get a loan. And there are situations where you might know they could qualify for a loan that maybe your bank doesn't offer, but you'll tell us, hey, they need this certain kind of loan.
Yeah.
We just don't offer that. But at least we're armed with, now we try to find a lender that can do
Yeah.
that. And I can't think of when that's happened, but that's just, you understand all of the loan
Yeah.
processes and have that background. And that's just something that's.
You're like
comes with
the
experience.
Google machine of mortgages.
That's right.
Like we don't Google our questions,
copy out that.
we just text you.
That's a good idea. Yeah, I like it.
Yeah, you should.
No, absolutely. It's because Prosperity Home Mortgage is direct lender. So we work directly with Fannie, Freddie, with direct lender for government programs. And if the guidelines, kind of like laws, right? They could be convoluted, they could be interpreted differently, depends on the mood of the day, how you read this guideline today, you might interpret it differently tomorrow. So there's always gray area, just like with a law. So we have ability to go directly to Fannie and Freddie. We have a special representatives that we can go to and ask them, so in this scenario, is this scenario acceptable for you? Would you buy a loan from us? And if they say yes, that's it, no brainer. Or if they say no, they will provide us with guidance what to do. And we also have some special niche programs that maybe for someone who does not fit in that Fannie Freddie government programs guidelines, we can do outside the box programs. We call them non-credit qualified programs, just something special that doesn't work for everyone. But if you really need a mortgage and you cannot qualify for regular financing, we can do those. And the honesty is important too. If I cannot do the loan, if I know that we don't have this program available, I'm gonna tell, okay, I cannot do this. They should go maybe to this bank, or if I don't know the bank, like Google where you can go and try to get a mortgage from them, because you will benefit from that more. And then maybe later you refer someone to me or come back to refinance.
That's right. That's right.
And lastly, check reviews. Like with anything, you want to buy a product, you want to rent a house for vacation, you Google the reviews, you check the reviews. The same, check the reviews for that particular, the bank, yes, but I would go more for the person, because bank might not have good reviews or might have very good reviews, but that particular person could be complete opposite of the review. So you want to check and read them, not just look at how many stars, but you want to read them.
Yeah, that's a good point.
Yep, absolutely. I always like to go look at the worst ones first, the lowest star ratings, just to see like what the worst case scenario is and be like, okay, we can handle that.
It's a really bad way of going about things.
So that's about it. That's all I have for today.
Well, I think it's a good list. I think this is going to be a good resource because you when you're first entering into this world, you don't know that there's a difference between lenders. It's like it's just interest rate. It's just like when you're talking to realtors, you don't know that there's a difference between the quality of the agent that was representing you. And people sometimes will come in and just, what's your commission rate? And they'll just go for the lowest one and then they regret it later.
Right.
And same thing with lenders. We've had people that have taken lenders just because of the lowest interest rate and come extremely close, or in fact lost earnest money deposits because that lender didn't meet deadlines, or that lender, didn't perform. So it is really, really important to have all these things, and not just missing deadlines, but the main thing in this market is that competitive advantage, having that person that will talk to the seller's agent and has a good reputation in the market.
Right.
Yeah.
Yeah, so I like to compare it to an attorney. If you have to hire an attorney, God forbid, for something, you're not gonna go and look for the cheapest one.
Right.
You are gonna be looking at, of course you're gonna be looking at your budget, but you also want to have someone you can trust and who can represent you well.
Yeah,
absolutely.
Which with that, it's the honest, the knowledge, and the availability. Those are, I think, are the three keys. Because if you have all that, then you'll be guided in the right direction, even if it's not them. I think that's the key takeaway there.
Yep. Okay.
Thank you.
Yes, thank you. This was great. I think this is going to be a video that's going to get used a whole lot. So I'm excited about it.
Yeah,
Same.
thank you for the topic. It's really good topic. Thank
Yeah,
you.
Yeah,
yeah.
It
Okay.
was
All right.
good for you.
Yes.
Good topic for you. It's your
You check them all.
5 stars, baby.
Thank
All
you.
right. Well, we will see you on next week's Mortgage Minute. And oh, real quick, how's everybody get in touch with you?
I'm always available. My phone number is 571-245-3000.
All right. All right. We'll
Thank
see
you,
you next week.
Tatiana.
Thank you.
Bye.
Bye.
Bye.